Hi, good morning. This is Ann Robinson with Reg Ed. Thank everyone for joining us this morning. We're going to cover our current regulatory issues concerning outside business activities. We do have a couple of the consultants with us with Evershed Sutherland. Cliff and Brian will be joining us as we go through. We're going to give it just a minute. The webinar is loading all of our attendees, so we're going to give just a minute for everyone to get loaded, and then we'll get started. Thank you. All right, it looks like everyone is loaded into the webinar. If you have any questions during the webinar, you can use the question and answer feature within the GoToMeeting. Just simply ask the question and we'll address those as we get to them within the PowerPoint presentation. We will be on mute during the entire webinar just to prevent background noise. However, again, if you have a question, just simply use the question feature within the webinar. Eric? We're going to cover today, we're going to go over what is an outside business activity, examination trends, recent enforcement actions, compliance considerations, and technology-enabled best practices. Eric? With us today, we have Brian Rubin. Brian is the Washington office leader of Evershed Sutherland Litigation Group with 20 years of experience in federal securities law. First prosecuting and defending, Brian represents clients being examined, investigated, and prosecuted by the U.S. Securities and Exchange, FINRA, and other self-regulatory organizations and the state. Okay. We also have with us Cliff Kirsch. Cliff began his career at the SEC. He became Chief Legal Officer for one of the country's largest duly registered broker-dealer investment advisors, and then joined Evershed Sutherland in 2006. He relies on his regulatory and in-house background and an up-to-date knowledge of regulatory developments to provide practical and innovative counsel to broker-dealer and investment advisors in the area of securities regulations and compliance. And myself, I am Ann Robinson. I'm the Senior Vice President of Business Development at Reg Ed. I'm responsible for a number of the applications. I previously came from the industry. I worked with Morgan Keegan for a time, and I've actually implemented Reg Ed at a couple of different firms. I've been with Reg Ed for about 5 years now. Eric? And now we're going to turn it over to Sutherland. They're going to go through, what is an outside activity and move through. And again, if you have questions, just please ask them within the application, and we'll address them as we get to them.
Thanks, Ann. This is Brian. I'm in D.C. and Cliff is in New York, and I'll give a few introductory comments before we start with what is an OBA. As you saw on the slide at the beginning, there was a little bubble about OBAs, OMG, and how many webinars get started with the internet lingo, and the answer is not too many, but we thought OMG, OBA sounded good together, because they sort of sound similar, and we also thought that they were appropriate because reps, particularly those who are more entrepreneurial, think, oh my gosh, my outside businesses are crucial for me to survive, and firms think, oh my gosh, these OBAs are causing us lots and lots of headaches. And later on throughout the presentation, we'll use some other text messages or TM humor in an attempt to make today's webinar a little bit more exciting, not that OBAs aren't interesting enough all by themselves. The issue that we're talking about is so important that FINRA recently issued a notice that it is re-examining OBAs and private securities transactions to determine whether those rules are meeting the intended investor protection goals. And if you're interested in having a say in the process, look at Regulatory Notice 1720, and comments need to be filed by June 29th, so keep that in mind. OBAs are obviously important for financial advisors, particularly independent ones and those in smaller communities where clients in those towns and even in larger communities expect multiple types of services from their financial advisors, like accounting or estate planning or consulting. And firms obviously need to be aware of them and have to supervise them depending upon the types of outside business transactions they are. And with private securities transaction, there are additional obligations and burdens. And of course, FINRA regularly focuses on the issue and brings a number of enforcement actions and examines lots and lots of firms and lots of reps for the issues. As Ann mentioned, we'll be talking about what is an OBA. We'll then be going to examination trends, an overview of recent enforcement actions, and then compliance considerations for OBAs. And then Reg Ed will provide some information about uses of technology with regard to OBA activities. So Cliff, if you could kick us off with what is an outside business activity?
Yeah, sure thing, Brian. And I'll spend a couple of minutes just laying out the regulatory framework. And hi, everyone. It's Cliff Kirsch, a colleague of Brian in Evershed Sutherland's New York office. So in terms of what is a business activity, think broadly. And that's what FINRA intends in its definition, and that's what it states in the definition. An outside business activity is any business activity conducted outside the scope of the relationship a registered rep has with their broker-dealer firm. So again, any business activity conducted outside the scope of the relationship a registered rep has with his or her broker-dealer firm. So examples that you see, not necessarily in the order that you see them, is tax prep, accounting support, bookkeeping, legal services. Two OBA activities that got a lot of scrutiny are fixed insurance sales and operating a registered investment advisor. So with the first one, fixed insurance sales, many broker-dealers allow their registered reps to conduct sales activity related to fixed insurance sales, which are not securities outside the broker-dealer. So in that case, it would be an OBA. But where the broker-dealer says, no, that's within our scope, we want you to conduct that activity within the scope of your employment with our firm, then it's not an outside business activity, it's a firm activity. So again, fixed insurance sales, and then operating a registered investment advisor. And what the activity here is, Brian Rubin and me are registered reps. We work for ABC Broker-Dealer, but separate and apart from that, we also established Kirsch Rubin planning or advisors, separate and apart from the broker-dealer. That our advisory activity, if done outside the scope of our BD activity, is an outside business activity. And again, all these are just examples of outside business activities. And those first two, fixed insurance sales, operating a registered investment advisor, particularly a lot of scrutiny around those in the last year or so. On the next slide, we established the framework, that we start off with FINRA Rule 3270, and it used to be designated as NASD Rule 3030. Again, but with the rule consolidation over the last few years, it has a new FINRA rule number, 3270, and also has new requirements that the old rule didn't have. What 3270 does, it basically restricts registered reps' ability to engage in an OBA, and the format is that a registered rep must give prompt notice before engaging in an OBA. And once the firm is informed of the OBA, there's a process that needs to be put in place by the firm. It has to determine whether to permit the activity, subject to certain specific conditions, or not permit the activity. Basically saying, we don't think this is the type of activity you as a registered rep who works for us should be engaged in. So again, a firm is required, based on the notice, to permit the activity, permit it, but impose conditions, or to disallow it, to not permit it. So 3270 is going to be the core of the rule. There's also 3110, which is the supervision rule, and I'm just trying to lay out the framework here. 3110, basically requires supervision with respect to FINRA rules. So 3110 says that a firm needs to have a process in place to to make the determinations it needs to under 3270. That part of what is required from a supervision perspective is a process and infrastructure to make sure reps know to disclose OBAs to the firm, and a process that's formalized to make determinations whether to permit the OBA or not. Before we go to the next slide, let me just mention a couple of other things that come into play with respect to OBA activity. Item 13 of the Form U4 requires disclosure where a rep is engaged in other business activity. It's called Other Business, Item 13, and it asks for details of the other business. So again, that's another related requirement. Rule 3270 is the rule, and Item 13 of the Form U4 requires disclosure about other business activities. And for those firms that are duly registered, that are also operating an ADV, there's a Part 2B of the ADV for those firms who are operating as an advisor as well. The Form ADV Part 2B is a brochure supplement, and it requires disclosure of representatives outside business activities. And I would say the rule doesn't necessarily conform to the FINRA side of things, so you have to have separate processes in place for your compliance obligations under 3270 and the related disclosures under 3270 and the Form ADV Part 2B, Item 4. And the other critical piece of the framework is private securities transactions, which we handle on the next slide. And,
Cliff, we have another question that came in, if you have just a minute. It's, what are the concerns with executive officers having outside business activities with other registered financial firms, i.e. consulting? Is this a common occurrence? So if an executive officer has a consulting arrangement with another firm, can you address some of the concerns that might be around that specifically?
Well, I think the question is, I think at the the starting point would be, is that a type of activity that should be disclosed as outside business activity? And it would seem, if I'm understanding the relationship, an executive officer of one registered firm is operating as a consultant to another firm, if I have it down, and that would be a 3270. That would be an outside business activity that would need to be disclosed, and each firm would need to have its own determination whether it should be allowed or not. Personally, I haven't seen those relationships. I just can't speak as to those. I haven't seen those firms permitting it, so I really can't weigh in as to why a firm would allow it. But again, I can tell you from FINRA's perspective, they would look to make sure that the firm has made a determination what exactly the executive officer is doing for the other firm and whether that conflicts with any of his or her obligations to his, I'll call it, main broker-dealer.
All right, thank you.
Sure. Yeah, so I was saying another piece of the framework here, we have the OBA framework, but the other is private securities transactions, PSTs, private securities transaction. And with an OBA, we're dealing with business activity. With a private securities transaction, we're actually dealing with a securities transaction. So we're dealing with the actual not business activity, but something that is closer, totally within the scope of broker-dealer, a securities transaction. And a PST is a securities transaction outside the regular course or scope of an associated person's employment with a member. So it's, again, any securities transaction outside the regular course or scope of an associated person's employment with a member. They're governed by a separate rule, not 3270, which is OBAs, but we'll call it a companion rule, 3280. And that applies to all associated persons of a member firm. And that requires that the rep provides written notice of the private securities transaction to the firm. Again, you see that notice requirement. And then if the firm does approve the participation that may result in selling compensation, the rule requires the firm to review the transaction, to record it and review it as if it was being transacted by the firm. So basically have a supervision over the transaction. Just a final point before we move on, going back to that example of an independent advisor, securities transactions engaged in by an independent investment advisor. So that independent investment advisor is an OBA activity. But where that independent investment advisor is engaged in securities transaction, that's going to be a private securities transaction and need to be supervised as a private securities transaction. So, one activity like an independent investment advisor can rise to the level of being both a private securities transaction and an OBA. And I think we're ready to move on.
Next slide. So we'll now be focusing on sort of the regulatory focus and exam trends, and sometimes understanding regulators' focus may feel like trying to understand a foreign language, or like old people trying to talk to young people via text like here. We have the mom saying, "What does IDK, LY, and TTYL mean?" The kid responds, "I don't know, love you, talk to you later." The mother says, "Okay, I'll ask your sister." So a miscommunication. Next, Cliff, exam trend.
All right, Brian. Thanks. And I'm just going to spend a minute on exam trends, and then Brian, I'm going to hand it over to you. I think the point, and probably is an obvious point, is that OBAs are an issue that FINRA has been focusing on, not just recently, but for the past few years. And its exam priority letters sort of highlight this, and what the scrutiny that FINRA has been applying. It first looks at the process that firms have around considering whether or not to allow a proposed outside business activity. So they want to look at the full process in place for making sure that reps disclose OBA activities and who at the firm is responsible for making determination, how do they catalog all the OBA requests, what's the criteria they use, and what around that criteria, how do they make judgments as to whether the OBA will compromise a registered person's responsibilities to the firm or may confuse investors, where investors think, hey, this OBA is really part of the firm's business. So again, real scrutiny around this from FINRA, not just today, but for the past few years. And I would also note that FINRA looks at the process in place for evaluating OBA requests, but there are special circumstances that can cause FINRA to look for instances of undisclosed OBAs if they get in a customer complaint, or if they have something that causes them to question a branch office or particular reps or something like that. They'll go out of their way to look for Google searches or the like to see if there's outside activity of that registered rep that hasn't been disclosed. And with that, Brian, I think I'll hand it over to you to talk a little bit about the enforcement trends.
Sure. Next slide, please. Before we get to the chart and the data, let me explain the source. At Evershed Sutherland, we have a database of all of the FINRA enforcement actions, so we can slice and dice data by various categories and various issues. So we did it with regard to OBAs, and as you see, there's generally about 50 to 60 enforcement actions every year. Most of them are against individuals, and as you can see, the fine levels really aren't that high. Often there's really no customer harm, but there is a perceived harm to the marketplace. And the issue is really there's a big cost to comply in terms of following up with the reps, doing surveillance. There's a lot of time and labor required to deal with these issues. The general subcategories of cases that we'll talk about are four. First, not having proper WSPs or not enforcing the WSPs adequately. The second is treating private securities transactions as OBAs and failing to assess compliance with 3280. Third, not investigating red flags. And then the fourth is the failure to report OBAs on Forms U4. So let's go to the next slide. And we have another text message. The kid goes first. Got an A in chem. Mom says, WTF, well done. Kid says, Mom, what do you think WTF means? Mom says, well, that's fantastic. So this is another example of an OMG moment, and it shows that even if you think you know what's going on and you may be on the right track, you sometimes end up being on the wrong track and you may get run over, which means we'll be talking about enforcement actions now. And let's go to the next slide. So these cases, the initial ones, are failure to have WSPs addressing 3270 or enforcing the WSPs. The first case deals with a firm that didn't update its WSPs to reflect 3270 when it became effective in December of 2010, and the firm didn't adequately follow its procedures with regard to the prior rule. The reps were supposed to sign and return an OBA approval request form, which was supposed to be signed by a manager or reviewer. The outdated WSP stated that the CCO or designee was supposed to ensure that the forms were completed, but 14 reps didn't complete it, and the firm was fined $125,000 for this conduct and other conduct. The other issue with the first case is that the CCO was sanctioned. The AWC said he was responsible for making sure the OBA forms were complete, and he was responsible for reviewing and approving the OBA forms. He was fined $10,000 and suspended for 2 months. The second case is pretty straightforward. The firm was supposed to notate an OBA review with a mark, but there weren't any notations or evidence of review. So the takeaways here from these cases are: first, update your WSPs. Second, if you have outdated WSPs, FINRA may still hold you accountable for those policies and procedures. Third, FINRA can charge you if you don't follow your WSPs. And then finally, CCOs can be liable in this area as well as other areas if they don't comply with their procedures. So to the extent folks listening in are CCOs, you want to make sure what your procedures say in terms of what your responsibilities are. The next slide deals with treating PSTs as OBAs and failing to assess compliance with 3280. The first case, one of the reps was associated with an unaffiliated RIA. The RIA was disclosed to the firm and approved as an OBA. The rep, however, participated in transactions for compensation through the RIA, but the broker-dealer didn't record or supervise that activity, and the firm was censured and fined. And in this case, the individual wasn't charged. The individual disclosed the RIA to the firm, and the firm mistakenly approved it as an OBA when it should have been reviewed as a private securities transaction. The second case dealt with an issue that FINRA said was obviously a private placement and should have been signified as a PST rather than as an OBA. So the firm just missed it and wasn't paying adequate attention to what was going on with that activity. So the takeaways here are: first, when firms are looking at OBA disclosures, they need to evaluate whether the activity should actually be categorized as a private securities transaction, and Cliff discussed the issues with regard to what is a private securities transaction. Second, if it is a PST and the rep is receiving compensation for the transaction, you need to make sure that the transactions are recorded on the firm's books and records and properly supervised as if they were the firm's own transactions. The next slide deals with a couple of instances of a failure to investigate red flags. And we often see these in exams and investigations. Something blows up with regard to an outside activity, and FINRA looks to see whether there were red flags, whether the firm should have known what was going on and just simply dropped the ball. And the first case deals with the firm's failure to undertake a required review with respect to 20 disclosed OBAs. And in one example, the financial advisor disclosed the OBA was being formed for the purpose of raising capital for investment in closely held businesses. And the FEA said that he was a managing member, coordinating structure, and bringing investors together. FINRA said there should have been some heightened scrutiny here with regard to that activity. The CCO didn't conduct any review of the activity and let the financial advisor continue to stay involved with the entity as an OBA. So this is another example where the activity was mistakenly viewed as an OBA and it should have been supervised as a PST. And there were other issues in this case as well, including backdated OBA forms. The next case, the firm failed to establish and enforce procedures regarding OBAs, and in addition, there were 2 reps who originally submitted OBA questionnaires to the CCO requesting permission for the activity. They wanted to set up a limited liability company, and they said they were going to participate in a private placement to raise approximately $500,000. The firm denied the activity, saying that it would lead to a private security transaction, so that's a good thing. But then after the denial, one of the reps left the firm voluntarily but retained the other rep as his registered rep of record. And the reps continue with this business, and the firm failed to identify and respond to red flags dealing with these issues. So as Cliff noted, if you become aware of an issue and you're just doing routine exams, you may want to Google, you may want to look through other files and other documentations in addition to attestations and other things so that you are aware of what's going on. And the takeaways are, first, pay attention to what is disclosed regarding the OBA. Sometimes they may be PSTs again, and you have to figure that out. Second, if a firm denies a certain outside business activity, the job isn't necessarily over. There may be red flags that you'll need to follow up on, and FINRA will likely look for those types of red flags. The next slide deals with the failure to disclose OBAs on Forms U4, and I won't go through all the details with regard to those cases highlighted because they are fairly straightforward with regard to either initially disclosing the OBA on the U4 or disclosing it on amendments. And the takeaways are, first, for firms, when individuals report the OBAs, you have to timely update the U4. Second, scrutinize the OBA disclosures to make sure that all actual OBAs are reported. And then third, for individuals, requesting permission for OBAs and then stopping the activity if their permission is denied. So the rep has to be aware of what the firm is saying and abiding by what the firm does. And sometimes we see that reps don't really care what the firm say because the OBA they think is more important to them, and they can get sanctioned for that kind of conduct as well. And then the last slide in this series is looking at state regulatory perspective, if we go there. And as we know, the state securities departments often have their own independent authority to investigate and sanction individuals and firms, and OBAs have been a significant part of state enforcement activities. The state regulatory trends are consistent with the issues that we've been talking about and what FINRA has been focusing on. And the state regulators have made statements suggesting best practices, and again, they're consistent with what you would think. The one interesting issue is that they have said that if there are OBAs that haven't been adequately disclosed or practices regarding OBAs, the states do want to be notified of that activity. so that's something to be aware of. And this information was taken from Florida, New Mexico, Texas, Washington, Missouri, New Jersey, and Alabama. The Financial Services Institute reached out to a number of states, and these were the issues that were identified by those states. Okay, let's go to the next slide. This is another transition slide. The mom says, your great aunt, and I don't mean to impugn moms, I didn't write these actually. The mom says, your great aunt just passed away, LOL. The kid said, why is that funny? Mom said, it's not funny, David. What do you mean? And David says, Mom, LOL means laughing out loud. And Mom says, oh my goodness, I sent that to everyone. I thought it meant lots of love. I have to call everyone back. Oh God. So in this case, the mom had to go back to the family, correct her prior understanding. In the next few flags, Cliff will provide advice about what firms should do so they won't have to go back to the regulators or to reps or to clients and explain the conduct.
Yeah, thanks, Brian. And what we draw on in these next couple of slides is statements from FINRA, in terms of their guidance to members as to what considerations they should undertake when reviewing an OBA request. And the first thing they said is firms should have a process once they receive the information, once they receive the request. Is the OBA, simply confusing? Is it too confusing to the client? The second point is related to that, and it's whether the OBA will be confused with the broker-dealer business. Is there enough of a wall? Will the end client understand that I'm engaging in this business with you, rep, separate and apart from your broker-dealer business, or am I going to likely be confused, and do I think that your activity will be sort of backed by, ensure that I have a right of recourse with the broker-dealer? So that's another issue, another consideration, and what what FINRA has said there is, sometimes the confusion rises to the level where you just can't allow it. Sometimes confusion rises to the level where if a disclosure statement is provided, that might help. But again, a real focus by FINRA as to potential confusion. And then the last thing is whether the OBA is really an OBA or is a private securities transaction. And what FINRA is saying there is you, firm, own that determination. And they're reacting to situations where promoters and the like have gone around and dealt directly with registered reps and basically say, hey, these are OBAs, these are not private securities transactions. Maybe we have an opinion on that, or maybe we've just done analysis, and we, the third party, is telling you, rep, you're okay. This is an OBA. It's not a private securities transaction. And what FINRA is saying is that registered reps need to know that they, the firm, the broker-dealer, has to make that determination. And the registered rep can't rely on a third party to make that determination. So what FINRA looks for is for adequate disclosure by the rep so there's enough for them to make the determination, is it an OBA or a private securities transaction. On the next slide, we get to sort of the other big compliance consideration is how do firms go about detecting for undisclosed activities. And again, what we're drawing on, just to help inform the discussion here, is what FINRA has said. Again, from their annual conferences. In terms of undisclosed activity, one thing they said is that there's some activity like reverse mortgages, just don't allow, because based on what they've seen, there's potential issues. That was one tip that we've heard from FINRA. The other is a firm should investigate lifestyle changes that don't fall in line with earnings. So, is there any suspicion that a firm has as to the type of lifestyle that a rep is living and the amount of compensation he's getting from the firm? And if they're out of sync, is there a red flag that should be investigated by the firm? Then, if there's certain if there's certain activity where you're seeing income flowing to a rep that's unrelated to a brokerage business, arguably through review of bank accounts, or depending how far a firm wants to go here. But that's another thing that could help detect undisclosed activity. And the review of third-party emails where it comes through the firm server might be another avenue to detect undisclosed activities. You could also do, we mentioned Google searches before that FINRA does. That might be an avenue here. And then the last point is registered reps must alert firms about the sale of their outside business. And the larger point, the broader point here, is that FINRA expects outside business activities to be an ongoing process. So even though if an individual has approved it, from time to time, any changes in scope, termination, and the like should be disclosed to the firm so they can make any determination as these changes take place. And on the next slide, I think, Brian, were you going to take that next slide? What OBA practices have firm adopted? Okay.
Yeah. So a survey was done of a number of firms, and these are some of the practices that they've adopted, and it's a lot of stuff that we talked about already. For the approval process, often firms usually have forms asking about the type and the nature of the activity, asking about the rep's role and the ownership stake in the activity, a description of the duties, and then there are often questions about compensation, what compensation is going to be, how it's going to be paid, estimated time the advisor will spend in the OBA, the source of the capital, if there is capital, questions about any transactional authority or investment decision authority, and then questions to find out whether it's really an OBA or a PST. In terms of OBAs that are not permitted, some firms don't allow PSTs involving control over client funds or variable life settlements or hedge fund formation activities. And among the considerations are how much supervision would be required, and with regard to clients, the extent to which there would be confusion between the OBA and the firm. In terms of policies and procedures, usually reps are informed about the firm's policies and procedures during the onboarding process so that the U4 could be filled out properly. I think virtually all firms, if not all firms, have an annual attestation regarding OBAs. And the point is wanting reps to know that they cannot engage in OBAs prior to approval. A lot of firms have annual audits of offices, annual interviews, educational training, and during the branch visits, talking with the reps about these issues and going through files to make sure the firm understands what's going on. With regard to undisclosed OBAs, firms take various postures and sanctions about that. Depending on the circumstances, they may fine the individual, they may terminate the individual if there's purposefully withholding of information regarding OBAs. They may issue letters of caution. And then, repeating a lot of what Cliff said, procedures for discovering unreported OBAs, Google searching, looking at websites other social media like LinkedIn and Facebook, obviously doing email review, branch exams, branch manager questionnaire, analyzing financial advisors' checking account records, and then looking at books and records of approved and disclosed OBAs and unapproved ones to make sure that the reps are complying with what they were supposed to be doing. And Ann will now talk about some technology that helped firms out.
Hi, good afternoon. So, there were multiple different items that were mentioned by both Cliff and Brian that, technology can help you support. So data collection is one of those items. Cliff, mentioned exam trends, the process for review and approval. How do you categorize? There was a discussion around lifestyle changes and if compensation aligns. So we're going to go through a few different items that when you're looking for a technology solution that you would want to ensure that your provider had these features in their solution set to make sure that you can comply with the regulations and ensure that you're protecting yourself against those enforcement actions. Eric? So data collection. So you want to ensure that your technology provider has the ability for a pre-clearance or pre-approval, so the employee can provide prior written notice. You want to ensure that there's workflow routing and there's enforcement so that you can ensure that all the questions that are required. There's a lot of discussion about categorizing an outside activity, making sure that you're gathering all of the correct information. So you want to ensure that you have those safeguards in place. Written forms are very difficult to ensure that they're completed before they're sent in. But when you're looking at provider solutions, look for someone who does have that ability to, to really track to make sure that everything is answered correctly in the format that you're looking for. Look for a full audit history. An outside business activity submitted, 2 years ago could change significantly throughout the process. So I submit an outside activity. I'm a member of a board, and 2 years later, I go in and I modify that outside activity, and I now have, Brian had mentioned some people prohibit check writing authority and different items regarding outside activities. Some of those questions may change your approval, so look for solutions that do have that full audit history. And then integration with FINRA, if you can get that end-to-end integration to make sure that you're getting your filings to FINRA correctly, that's very important. And periodic attestations. We do have many clients who, to protect themselves and give a reminder to their financial advisors, they will build out periodic attestations either as part of their compliance questionnaire or just an OBA attestation to remind people what they have on file, and have them go in if there's something inactive, they can go in and make it inactive. I know years ago when we rolled out the Form ADV Part 2B, a lot of people came back and you would tell us, I don't participate in that outside activity anymore. So it's really nice if you do an attestation to give them that visible reminder of what you do have on file for them. Workflow directed. So this really ties back to, to lifestyle changes. The person who's going to be the easiest to identify if there's a lifestyle change in their financial advisor is that going to be that frontline supervisor. So being able to route the approval queue, and so that advisors are aware of what so that supervisors are aware of what their advisors are participating in. So being able to drive that through your hierarchy. And, this is really your functional hierarchy, the person who's really supervising that person on a day-to-day basis, so that they can identify if there are things happening, even with a disclosed outside activity that, that may need to have a little bit of a harder look at and report that to compliance. Being able to configure your rules based on your business. We have multiple different types of clients. A bank, broker, dealer is going to be much more conservative when they look at their outside activities versus an independent broker dealer. So being able to really look at that and configure your workflow based on your business requirements. And notification of limitations and conditions. So FINRA mentioned this, in one of their notice to members a few years ago, is that, you can approve an outside business activity and put, terms and conditions on it. Many times you'll see, in order to avoid that client confusion that both Brian and Cliff had mentioned, that outside activities can't be conducted on, and on the same premises as the broker-dealer activities. So you want to be able to notate that in your approval process, have it ready for a regulator should they come in and do an examination, but also get that back to the end user. You want them to see that condition and know that that's part of your approval. Eric? And then the tracking and reporting. So, really being able to report on critical compliance information that could be required by FINRA. One of the questions on the FINRA U4, as we know, is the investment-related yes or no, the number of hours. So being able to do reporting to really, be able to risk rank and review your out the business activities by representative. Reconciliation with the U4. Many of these do require a filing on the U4, so being able to automatically amend someone's U4 as they add or remove these activities. And then your record keeping for the approval process. As we know, it is a FINRA hot topic. It's something they're going to look at when they come in to do their audit. And you really want to be able to show the due diligence that was done when you go in and approve these outside activities. I know many of our clients will even do a Secretary of State search, for example, to look at the business itself, find out any additional information. You can gather a lot of information about an outside activity from an end user before they submit it to you, but you still may need to do a little bit more digging on your side before you approve it because it could be a risk to your firm. Being able to do your reporting, you want to have really robust reporting so that you can look across your organization and see if you have any trends or any issues with outside activities, and then looking for those negative trends that the management might want to take a little bit of a deeper dive into. Eric? And we did have a number of questions that did come in. We just wanted to talk a little bit about things that you should look for in a financial solution. So I'm going to turn it back over to Cliff and Brian. Cliff, can you cover up a couple of the questions that came in? I can read a few of them to you. We can start trying to address some of these.
Sure. So,
all right. Go ahead.
Yeah, no, I'm going to say, so yeah, if you want to read some, that's fine.
All right. So one of them is when supervising an unaffiliated investment advisor, other than including PSTs on the BD's books and records, what are other things that need to be taken into account?
Yeah, so there would be the customer confusion, whether to allow it or not, and it would be to make sure, when we say other than the PST, that is like a very, very significant issue that the independent advisor will often trade at a third-party custodian, through a third-party custodian. That third-party custodian will send back securities transactions to the broker-dealer that needs to be reviewed by the broker-dealer. That is the real critical issue. The other thing with respect to independent advisors is that there are some states that have just, in a way, disregarded the model of OBAs and saying, hey, you're the broker-dealer, we want you to supervise that activity. And it's just to say that independent advisors do get a lot of scrutiny both by FINRA but also by the states.
All right, and we have a couple of different questions regarding charitable and other items. So this is one of those that I think we could probably cover both. Are activities like being on the board of your homeowners association or regular volunteer work, should those be reported?
Yeah, and so the starting point is 3270, which really talks about serving as a director, officer of another entity, of another person. So if somebody has that role where they're either an employee, independent contractor, an officer director of another person, some sort of board, even though it's a community civic-based board, there's no real avenue for it not being treated as 3270 if they do have that role.
All right. What is the best practice for documenting the evaluation of OBAs? So conversations with your registered representatives, entering information in the approval process. Can you cover a couple of best practices you would suggest? I know you mentioned Google searches specifically.
Yeah, in terms of like how we've seen FINRA approach it, FINRA will ask what direction did you provide your registered reps to report, and what standardized processes did you have in place to require the reporting, and what level of detail did you ask for? There's and in fact, sort of the remarks on the solutions get to the the need for real detail in terms of sort of evaluating these requests. And the U4 question gets into a number of details that we sort of mentioned, number of expected hours on the outside activity. So I mean that's sort of FINRA's focus has been what has been communicated to reps about how they have to go about disclosing and in what detail they have to go about disclosing.
Right. So then you're dealing with the onboarding process, what reps are told then, and then you're dealing with possibly the annual compliance meetings and the branch audits.
Thanks. So we did have one more question. So how do you inquire about someone's lifestyle without violating privacy laws? So you mentioned lifestyle changes should be taken into effect as part of the factor, but where does that boundary hit with some of the privacy laws?
Yeah, it's a tough question. When FINRA and regulators talk about this issue, the example they would give is, you see a style of dress, you see certain you see like certain cars and things. That's sort of how regulators talk about it. To the extent you're looking at bank accounts, yeah, you do have to worry. I think it's easier said than done than like really having a program to look into lifestyle changes. And I think all we could do is just sort of acknowledge the point that your regulators do say and do expect and anticipate that if something comes to your attention, that should raise a red flag, that they would look at a lifestyle change and said, hey, you should have been on notice. But yeah, to the extent that you go beyond certain things, yeah, it's a very fair question.
All right. Got a couple more questions here. How much detail of an OBA should be disclosed on the individual's U4? So should you really just stick to those questions that FINRA asks, or should you provide, I know you talked about confusion to clients, so how much detail would you suggest putting out there for an individual?
Well, if you stick to the U4, that will be a level of detail. The detail required by the U4 is it's informative. There's a lot of questions. If at let's say the annual meeting you ask for information about OBA, which many firms do, there should be certain triggers. Maybe not just a couple of blank lines where the rep gets to fill in what he or she wants, like we're in a free form, but rather some directed question and then like another section. But like the issue is sort of FINRA expects detail as part of these. The revising of 3270, they urged detail and a real understanding by a firm of the type of activity.
And one thing that comes up frequently is there is a text limitation when you go out to disclose into Section 13, the out to business activity. FINRA is asking for feedback regarding that regulation. We do hear many times that people would provide more detail, but just due to the number of outside activities, that there may not be enough room in that text box. So as FINRA asks for those, when they ask for comment on these regulations, everyone, that's your opportunity to make those comments to let them know that I provide more additional information, but there's a 3,000 character limitation in the out of business activity. So we hear that commonly that they have to cut text and they would put more information out there to avoid that client confusion, but just due to some of the character limits within the FINRA application itself, that's not an option. So all right. So we are coming up on the top of the hour. We have about 5 more minutes. So we will ask. I do have just one more question I'll ask for our panelists, and I do want to thank them for their time today. If we did not get to your question, we will try to address those offline. One of the questions is specifically related to rental property. Is rental property considered considered an outside business activity? I know this one comes up pretty frequently, depending on your broker-dealer on how they treat that. So, Cliff, Brian, can you address rental property as an outside activity?
Yeah, rental property does come up a lot, and maybe as part of this whole retrospective rule review that FINRA is doing, they'll give a little additional guidance. Arguably, if somebody has one property that they rent out, we're not talking about a business activity. We're talking about something that's more passive. To the extent that somebody has 3, 4, 5 pieces of property, then at some point it gets to a business activity. And I think practices vary. There are a number of firms that would say, one property just doesn't rise to the level of a business activity. And there's other firms that say, just to make it easier, report everything and then to us, and then we'll approve accordingly. But again, the distinction is going to be whether it's passive or not, and depending upon whether we're talking about just one instance or multiple, will sort of help inform that decision.
Right, and what goes into the rental property, if you're actively marketing it, even if it's just one property, or you're renting it out to your child or your aunt or something. So that goes to the passive versus active as well.
Okay. Well, we are getting close to the end of the webinar. I do want to thank Sutherland for your comments today. We will make the webinar slides available afterwards. We have had a number of requests for those, so there will be a process where you can request those slides. If you would like any additional information, we do encourage you to send that in afterwards. We will have a short survey at the end of the questionnaire that'll ask, additional questions that you might want to see for a future webinar. So please let us know if there's a topic that you might want to see for a future webinar. And we thank everyone for their attendance today. Thank you, guys.
Thanks a lot.
Thank you.